Hey everyone, welcome to the third edition of Economy, Markets and Macro. For those who are listening for the first time, this is a short podcast that I do every Sunday. I go over any news that I'm reading, writing, or something that comes across my feed, anything related to economy, markets, or macro, not necessarily Indian markets, but overall like India or world, something that looks interesting in like short bites. That's pretty much it. So I'm interested in markets, and this is something that I want to share with everyone, just something that I come across and find interesting. So with that away, a small introduction, I think we can just start out. So the way I do this is I share my screen and I just go over a few of those things that I'm watching around. Okay, so let's just start this. So yeah, I mean, the first thing that I came across is this. So it seems like the IPO market is back on track in India. As you can see, the number of DRHP filings have hit the 12-month high this June in the last month. So the chart that you see here is like month by month, the number of DRHP filed by companies. This doesn't mean that they have gone through IPO for necessary. This is just the DRHP filings count. And it seems like in June 25, there are around 34 DRHP filings in total, which means that we have a good IPO boom coming ahead of us. So mostly this is an indication of a bull market. So typically IPOs come in bull market because they want to offload share or raise some capital and they want to do it at a higher valuation, higher premium, right? And the only way they are going to get a higher valuation or a premium is when the liquidity high is high and the liquidity high is high during, bull markets. So it seems like this is an indication of an onstart of another bull market, I guess. I don't know how long it will go on for sure, but yeah, this seems like a very good signal for us to track it. And yeah, I mean, I'm looking forward to this IPO filings, all of them, and hopefully this bring backs the bulls in the market. We have been in a tight bound range for as long as I remember, so it would help us definitely. The next thing that I was reading around is the GST growth. So this is year-on-year GST growth, the net GST collections that India has done. So as you can see, when we started in FY18, it was around 4.5 lakh crores, and now we are at almost 11 lakh crores. So this is a really interesting thing according to me. I think what this indicates is mostly a formalization of economy. I'm not saying that everything is formal, but I think a lot of things are getting formalized in our economy. This is good. The tax collection that increases, and that hopefully that tax collection goes to country building like infrastructure, social schemes, and other stuff. Obviously, but yeah, getting economy formalized means more people come into tax brackets, more businesses come into tax brackets, and it just is easier to track the whole supply chain and much easier to track growth, what changes can be done, etc. Overall, formalization is good, and it's really interesting to see that GST collections have always been rising, which means that more and more people and companies are coming into the whole formalization stuff. Obviously, things like technology have helped this. Like now every vendor has a UPI. I mean, people do accept cash, but almost the consumers have become accustomed to UPI. So whenever you pay to an UPI, it gets directly into the bank account. And what happens is it's easier to track. And when it's easier to track for the government, like which people have actually paying how much and how much the business is receiving rather than cash transactions, it becomes easier to, track and get them into the GST ambit, GST net, and more things will get formalized. I think we are still far away. This has really long ways to go, is what I think. I don't think we are, at any level of maturity. We are still at, very lower levels, and I think it's just gonna keep on growing more and more in coming years. So these were the two good things about economy that I watched, economy and markets. But one of the most major news regarding to markets that came in next was the SEBI order on the Jane Street. So this is the order. I'm not going to go through whole order here in this video, but you can check this out. Basically, SEBI has put on an done an investigation on Jane Street. Jane Street is basically an HFT hedge fund kind of a entity. It is a US based entity, but they do operate in Indian markets. They have very huge amount of profits through Indian markets as well, a couple of $1 billion at least, if not more. and SEBI has done an investigation on them. They have done a thorough investigation. SEBI thinks that this is manipulation of market. I'm not going to give my view like whether this is legal, illegal, or something else, like whether this is true manipulation or not. I'm just gonna tell what this is about. So basically, SEBI is saying that change rate manipulated the markets. In this order is what it says. And the way it says is that, for example, on expiry days, what happens is there are options expiry, weekly expiries, right? Right now it is Nifty and Sensex. So what they said JS Group did was they used to push the index up, like in the morning they used to push the index up by buying cash stocks and futures. And when the index is going up, they used to sell huge amounts of calls and buy huge amounts of puts. And in the afternoon, they used to sell all those cash stocks and futures to bring the market down, thereby profiting a lot in their option positions. And on expiry days, the the options eventually go to zero if they're out of money. So this is how they try to do it. The order tells a lot of things about how they did it at particular times and stuff. Now we don't know how whether this is manipulative or not, but this was really an interesting thing that happened. Like it shows like our markets are shallow as well. Like if a single entity is able to move the whole index, like a bank Nifty index, with, with just few thousand crores of buying and selling, then it means that our index is really shallow, right? Like we have to take like it's not something uh, that should be easily doable by one entity, right? And if that is happening, it means that we might have to go back. I don't know, like I'm not sure, but maybe we have to go back and check our index construction methodology, I guess. Like it should not be so easy to manipulate an index which has a weekly option expiry, right? So yeah, it is very interesting. Please go through this if you're really around F&O markets. Read through this. There are few of the things that I've read there, and yeah, very interesting to read this whole thing. The next thing that I came across is this interesting chart, which shows like what is like don't fear all-time highs and what is the expected return, future return, when you invest in S&P 500 at all-time highs. So as you can see here, they have given average 1 year forward return, 3 year forward return, and 5 year forward return, right? So the blue is when you invest at whenever S&P 500 hits an all-time high, you invest in it on that day. Then what is the average 1 year forward return? And gray is basically when you invest on any other days, what is the average 1 year forward returns? Similarly for 3 year and 5 year returns. So as you can see, whenever you like, it looks counterintuitive, like we have always been told like buy low, sell high, but and so it looks very counterintuitive and very much like momentum investing. Like whenever something like an index hits an all-time high, if you invest in it at that point of time, you slightly outperform when you invest in all other times. The average returns are greater, and the more the time frame, the more greater the returns. As you can see, over a 1 year, it's only like 0.3% on an average, but over a 5 year, it's more like almost 2 percentage points on an average that you get better returns when you invest at an all-time high. Now, there is no trading strategy or investing strategy that you need to do because of this research. It's just something that you need to think about and imbibe in your mind. I was all like initially when I started in my investing career slash trading career, I was always fearful of all-time highs. So this should bust the fact that invest like don't fear all-time highs. It's okay to invest in all-time highs. Actually, it's better to invest in all-time highs. Like everyone has lump sum sometime in their life that comes upon, and everyone thinks, should I invest this lump sum if current index, like for Indians, if Nifty is at an all-time high or S&P 500 is an all-time high, what happens? What if the market falls? And I know there is a fair chance that market might fall 20, 30, 40% in the next 6 months. We don't know that, but the probability is on our side. Like when you invest at an all-time high, the probability is that you're going to be good over a long term. Yeah, and I'm going to go do a study on Nifty as well. So do watch out for that video. I'm going to publish a similar study on Nifty in the coming week, and hopefully we get more insights into our own Indian index with this kind of investing in all-time high. The next thing that I watched is this tweet, which is basically that dollar had in 2025 dollar has its worst, performance year to date until like this June 30, 2025. So these are all the lines for how dollar performed every year from 1974 to 2024. So these are all the lines, like it went up or went down, but basically all the calendar years where how it performed from 1970. Current, the blue line is basically showing the 2025 trajectory for the dollar, and it seems like it is on its worst performing path, at least for calendar year 2025. And this is also the reason why European markets have been, outperforming US markets. Like if you see over the past 6 months, Europe has on an average like 20 to 30 percentage returns, while S&P 500 is at like breaking even or maybe 4 or 5 percentage kind of a return in USD terms, right? And this has been a major part of that outperformance for European stocks as well. Generally, when dollar underperforms every other currency, or in general underperforms other currencies, uh, usually the bull market or the liquidity shifts from US to other countries like developed markets and emerging markets. This is what happened during the 2003 to 2007 bull market that we witnessed in India as well. Dollar underperformed, gold outperformed, and even S&P 500 and Nasdaq 100 underperformed. So there is a very high probability that this decade might be emerging, like a lot of liquidity can come into emerging markets slash other developed markets than US. And I'm really looking forward to this. Hopefully, this also brings back the animal spirits in Indian markets. We have been, trading the same range for the past year now, almost like in September, we made a high at 26,000 and you're still there at Nifty. So, and even my own momentum portfolios have not recovered to its all-time high again. So, hopefully, this is a good signal for us to going forward. And the last thing that is very interesting around macro is the One Big Beautiful Act. So this was passed by both Senate and House in the US. I think it was signed by President on 4th of July. I'm not sure. I think it was. Oh, yeah, it says here that it was. So this was a very interesting bill. I'm not going to go into all the details of this bill, but I was reading around this, like a lot of articles and summaries, etc. And these are some of the key points that I've seen in this. Like the major things that relate to any our economy or markets in general are these, like there are a lot of tax cuts. So a lot of taxation cuts happened on companies and individuals both. So that was really interesting. Typically, the understanding is that when you cut taxes, the money flows back into the economy, and employment increases, salaries increases, etc. We don't know if it will actually happen or not, but that's what the understanding is for these tax cuts. There are also spending cuts, so it's not just tax cuts, but also spending cuts. So a lot of spending around green energy and uh, other things have been cut around bureaucratic government funding and everything. A lot of things have been cut, spending cuts. I'm not going to go into detail into all of those, but it's really interesting how US is acting in this whole big beautiful bill act. The next is defense increase. So they are increasing. US is already the highest spender on defense, the country with highest spend on defense, but they have increased more defense and internal ICE, which is the immigration control immigration control thing that they have. So yeah, I mean, really interesting things going on here. The effects that I see here are, will this actually lead to an increase in deficit for US? So what are the ripple effects? And short term, this bill might be really helpful for US's economy, overall world markets, and macro as well. But what are the long term effects? Right? It's in the ups to think about. It's not like, without going into political sense here. I just want to say, like, one aspect that we can see here is it might increase some deficits. Now, I don't know if will it actually happen or not, but very high possibility that it might happen. Can gold, because US is increasing deficits and maybe US interest rates stay at the longer range of the curve, maybe gold will still go on in its bullish phase. Will it happen or not? We don't know. What will happen to interest rates, right? Considering that the deficit is going to increase, will US rates keep on increasing? Will they remain stable or will they go down? That's something that is really interesting to see, and that is what will have an effect on the gold rally as well that we have seen in the first half of this decade. Although I think gold is overbought now, I think gold has rallied a lot. People are extrapolating it to weird prices now, and I don't think like at end of the day it is a metal and not really a productive asset. RBI itself has in its June report said that it has stopped, buying new gold. Uh, the rally has a little bit fizzled out as well, not in a very extravagant way. But I think gold has overextended now. I don't see really good, like most of the geopolitical uncertainty around wars, etc., is also behind us. So I think the gold rally should fizzle out now. We don't know what will actually happen, but I think at end of the day, it's just a non-productive asset. So we have to think about it. Like, are there any big uncertainties in the economy and markets now? If there are not, we can safely assume that gold might not perform as well. And when I say gold outperforming or underperforming, I'm talking about it in USD terms. Whether it will outperform or underperform in INR terms, I'm not sure because it all depends on our currency. Our fiscal is really great. Our import export is also fine. So I don't think our currency should depreciate a lot. And yeah, overall, I think in the next like few short years or long years as well, like 5 to 10 year view, I don't think gold is gonna perform a lot, but we don't know for sure, right? So yeah, it was interesting to see all these things, how our world is heading towards in terms of economy, markets, and macro. So yeah, thank you so much for joining here, and it was really wonderful to presenting this. Do look out for my video on the analysis of Nifty when you invest on all-time highs in this coming week, either Wednesday or Thursday, and another podcast, Economy, Markets, and Macro on next Sunday. Thank you so much. It was really great talking about